This is Marketplace Money from APM. I'm Carmen Wong Ulrich.
I have a question. So my question is,
You know, whether it's giving to charity, as we just discussed, or getting out from loads of debt, it's not easy to know what's the best thing to do with your money. So we're here to help. Doug Flynn joins us. He's a certified financial planner and co-founder of Flynn Zito Capital Management. Great to have you, Doug.
Great to be here.
Thank you so much for joining us. We're going to head out to Justin. He's just outside of Akron, Ohio. Justin, welcome. What's your question for us?
My question is, how do I begin investing? Currently, I am 28 and have about $500,000 sitting in a checking account.
Justin.
And know I should be doing something with that money, but really haven't got around to do anything with it yet.
You wild and crazy guy, $500,000 man. What's your home situation like?
I currently own a house, about $400,000 house, and have about $100,000 in equity in it.
Okay. And you have children?
I have one daughter who is 10.
Okay. Justin, you find yourself in a very interesting position of having all that money, and now it's what to do with it. Doug, that's a tremendous amount of cash.
It is. And with a 10-year-old daughter, I think that one of the first things you probably want to do is make sure that she's set up for college. So I'm wondering.
Wait, really? Really?
Well, I think that, I wonder, have you looked into 529s at all yet?
Yeah, I have, and I definitely think that's one place that I feel comfortable putting money, and I do need to get that set up for sure.
But what about retirement and cash savings? How much should he have? Somebody like Justin, how much should he have in emergency savings, for example?
Well, what's your savings ability? Are you ever at the end of each month, are you putting money away? How do you look?
Yeah, in the last 3 or 4 years, I've been saving probably about $100,000 to $150,000 a year.
Oh,
wow.
Goodness.
So
that's amazing.
As long as that's still the case, then what that does is that means that you don't necessarily need as much as other people might need for a cash cushion. So you probably can be on the short side. 3 months worth of expenses is really all you need, because in a couple of months you're going to have too much cash yet again. So it's really, the way I look at it is you have to sort of break this down into two things. There's planning strategies, and then there's the investment solution. So you want to talk about education as a planning strategy. You want to talk about retirement, and then decide, hey, how aggressive or conservative do I want to be with each of those? So they can be separate decisions. With that kind of savings ability, you don't need to be as aggressive as other people might need to be.
Well, Justin, I have to ask you because, are you a business owner, or is this income that you can pretty much count on? Because if you are a business owner, there is some risk involved there in terms of being able to lean on that income.
Yeah, definitely. And I am a business owner, so I do like having a little bit of extra money in the bank, just because you don't know if you have a bad year or, anything can happen. So
that's a great point.
Yeah. So Doug, in that case, when you are a small business owner, and I am as well, I like to have more cash than most people.
Makes sense. If you have volatility of income and risk there, then you maybe take less risk somewhere else. But as a business owner, that just gets me really excited, because there's so many things that a business owner can take advantage of with retirement. You're able to put away so much money with retirement programs that are built around you as the business owner, more so than the average person who works for somebody else.
Justin, my question to you is, do you have any other big goals besides retirement and college? For example, you have that home. Do you see yourself starting a new business or moving to a new home?
Yeah, I do. I mean, I like having some money on hand if I want to start other companies. I like things to be kind of liquid. And I think that's what scares me about investing in retirement, is that, as a typical young person probably feels, I feel like I will be dead by the time I'm 60 years old. I will never see any of this money I've made. And so, we have plans to move to the beach and buy a beach house and different things. And I'm just worried that all my money will be in some retirement account that I may never see.
Because you won't be able to realize it, because if you take the money out early, then you're going to get penalized. So, Doug, in that case, so if he's got $500,000, okay, which is all dream money to many folks listening right now, How do you break that up? And even if you take off a zero there, and it's $50,000,
Sure.
how would someone like Justin, who basically needs to keep cash on hand for two things: one, emergency, just in case the business doesn't do well.
That's right.
Two, because he wants to do something big with the money in the next 5 to 10 years.
Sure.
And then also save for those locking in cash into retirement, like a SEP and the 529.
Right.
How would you advise him to break this all up?
Well, it depends on how important. Well, you first have to identify how much are we talking about that you need to put away for these sort of short-term or intermediate-term goals. But once that's satisfied, there's a lot of power in saying, how much will it take to fully fund my child's education? Put that to the side. It's done. There's a lot of things that happen when you check that off in your brain. You're going to be able to fund her education. But when you physically do it, by putting it aside, you've checked it off. It's just like you have enough money to pay off the mortgage on your house.
No.
No, I'm not saying you should.
I know.
That's another question. I've had
I know.
But I've met with financial planners that say write a check for it. And
Well,
I know you guys would cringe at that and say you got to invest your money.
Yes. Thank you for reading my mind,
Yes.
because Doug knows I am so not a fan of that, because what is your interest rate on your mortgage right now?
It's kind of high, I guess, but it's a 5.25%.
I still find that still
in his tax bracket. He's obviously in a high tax
bracket.
Right,
you're in a high tax bracket. I mean, it's a deduction. It's not, to me, this is not a pressing need, especially you're telling us that you want to buy and move someplace else.
Right. But here's the thing to think about also is you have the house paid off. Even though you haven't done the financial transaction, the money's over here, you could pay it off. So now it's a financial strategy. Does it make sense to pay it off? You can. Same thing with the education. Same thing with retirement. And there's also a lot of power. You're not going to get these years back. One of my favorite quotes from Mickey Mantle is, if I knew how long I was going to live, I would have taken better care of myself.
Oh, right.
And the point is that, you might be gone tomorrow, but you might live to your 110.
Yeah.
So how do you plan both ends of it? And there's a lot of power in putting a little bit away for the future and sort of getting the feel for that. As you see the compounding and the power of that and the tax savings, you're definitely a person who's going to be able to do everything they want to do. It's just a matter of getting your hands around it and really developing, this much for the intermediate term goals. I could put a little away for the longer term. Let me lock my daughter's education up. I've got these other businesses. I've got plenty of cash. And you know what? Even if you allocated everything, 1 year from now, you've got another $150,000 in cash.
Right.
So it's not like that's not going to be there.
Well, and Justin, one thing I admire about you, I mean, it sounds like you're making all this money and you haven't gone and bought a McMansion. You're not somebody, you seem like you're a saver. I would be much more worried if you were not. If you were telling me, yeah, I earned this and I want to go, buy a house in Bali and a timeshare and, a McLaren or something. So you seem that you live not only within your means, but so well below your means that frankly, Doug, that is a strategy in and of itself, a tremendous strategy.
One good thing about living in Akron, Ohio, it is very cheap.
Yeah, so don't come to New York, okay?
5-bedroom, 5,000 square foot house. $400,000. So
Wait. But how much are the real estate taxes? That's the one that kills me.
6,000.
Wow, Justin, just don't move to New York, New Jersey, or
Yeah,
Tri-State area, because all that money will be gone. That's all I got to say. So do you think, Justin, considering the other short-term goals you have, the need to have some cash on hand, what do you feel like would be the first step that you want to take to doing something with this money?
Yeah, I guess I feel like I need to find a good financial planner, and that I've talked to different people, and I always feel like they all specialize in one thing, and so they push you towards that real heavily. Whether it's, I've had people tell me pay off all your debts immediately. I've had people that just say put all your money in this mutual fund that we support.
Oh, no.
And I've had people say buy tons of life insurance. So I just feel like I'm always getting someone that only does one thing, and I don't know how to find someone I can trust.
Well, I'll tell you one thing, Justin. Whenever I get a CFP on this show, they are well vetted, and they're not pushing anything in particular.
That's right. Because
you make a good point, Justin. What you want to do when you're looking for financial help is not only look for someone, hopefully, who is fee based as opposed to commission based, but somebody who's not going to have you do all of one thing, right, Doug? Because I think that this is a very dangerous scenario when you have somebody who has a lot of money and people just smell that cash.
That's right. Yeah, I think that what you look into is someone who's a fiduciary, and how you find a fiduciary and what a fiduciary is someone who has to absolutely by law work in your best interest. And so you can go on CFP.net. You can find a registered investment advisor. Those two types of investment professionals are fiduciaries, and those would be hired in a way that have to work in your best interest. And it's like anything else. You want to interview them and find someone that's a good fit, like a doctor or anything else, because it is going to be a relationship. And then I think you'll get to the right answers for you and have comfortable strategies that fit with your risk level and what your objectives are. That's the way you have to do it.
Okay. You said that site is CFP.net?
CFP.net, and another one is FPAnet.org. Those two sites in there. Make sure you cross-reference folks that you interview at sec.gov to check their background and see if they have any violations. And you just want to make sure that you have somebody that you have great chemistry with, someone who's not going to steer you in one direction and who's used to working with people like you. Because, Justin, as we now know, you have tons of potential.
Well, thanks. I definitely appreciate your advice and pointing me in the right direction.
Thanks, Justin. Thanks so much for joining us. Doug, stay with me. We're going to take a break. We'll be right back. We are back with Doug Flynn. He's a CFP and founder of Flynn Zito Capital Management in New York, and we're taking your calls. We've got Ben from Albuquerque, New Mexico, who's a fantastic segue from Justin, our other caller. Ben, thanks for joining us.
Hi, Doug. Hi, Carmen. And congratulations on the new gig.
Oh, why, thank you, sir. Thank you so much. So what's your question for us, Ben?
So I've been a long-time Marketplace Money listener, and I've heard of this Mythics fee-only financial planner for quite a while now. And I'm at the point where we actually have some savings that we can mess up by making the wrong decision in asset allocation or other errors like that. And I was wondering what your advice might be in terms of, especially from Doug's perspective as a financial planner, what kind of materials we should bring for a general financial health checkup, and also secondarily, if there are any questions that you wish people would ask in these situations.
Well, you know, Ben, we do have your mythical beast here, your fee-based planner. Right. So, Doug, this is a really good question because when you start, we talked about this being a very long relationship, and you want this to be a long relationship. Sure. So it's so important to ask the right questions. What should Ben be asking?
Right. So one of the things you're going to do is that you're probably going to want to bring along or send ahead information like your tax return and your pay stubs. A lot of advisors will want you to do an income and expense worksheet to get an idea of what your savings ability is at the end of each month. And, of course, all your statements. But what's often overlooked is things like your employee benefit statements if you work for a big company, and any kind of pension calculations. Those types of things are great to bring along. And then you can sort of meet or interview whoever it is that you might be looking at hiring to be your financial advisor. And one of the keys in that meeting is to walk away knowing exactly whether or not they're a fiduciary, so that they can work in your best interest, and how they're compensated. It needs to be extremely clear to you whether they're compensated on a fee basis or some kind of offset or commission or whatever the story is. You just need to be very, very clear, and they will tell you that. And in that first meeting, that's one of the things you want to walk away with.
So, Ben, one thing is that, you and your wife, you're an engineer, she's a pediatrician, so you have a really good, solid income. However, medical school cost a lot. So you're also dealing with 6 figures of debt. And you're dealing with it right now by kind of splitting. You put a certain amount per year into cash savings and a certain amount into that debt. Are you flexible if you get feedback like, oh, maybe you want to do this instead with that debt? Because that's a lot of money.
Yeah, we do have the flexibility. At the moment, I've been following the general advice of having automatic transfers into various accounts in terms of building up a long-term savings account or saving up for the next car, things like that. And it would not be much of an issue to shift more of that towards the debt. So what I'm looking for is kind of like what Justin's question was in terms of a checkup and determining what kind of strategy would be best in terms of allocating the savings to paying back the debt or just building up these various savings goals that I have. And also what vehicles we should use to build those savings, whether any of them are long-term enough to go into equities instead of just a regular savings account.
Oh, goodness, yes. Well, I'm sure we would want him to do that
Sure.
because he has a big ability to save.
Mm-hmm.
But, Ben, you bring up a really good question here because, Doug, I mean, you must see a lot of folks, the cost of education is so high,
Yes.
especially in fields like, let's say, you become a doctor, you become a lawyer, so you're loaded with huge debt loads. How do you both, when you start earning real money, manage the debt versus the savings? Because sometimes it seems between the interest rates that it's just a game that you're kind of trying to claw up a mud wall.
Yeah. Well, I think, in developing a plan, and the person you work with would clearly do this for you, it comes down to interest rates. Is this one big loan? Are there multiple loans? Are they different interest rates? Are they deductible, which are not? You want to have a strategy. And there's a easy way to just, when you lay everything out, say, here's what develops. These accounts maybe you should pay off more aggressively. These ones pay the lightest amount on, and then let's start putting money away towards your goal. I think that too many times people focus solely on paying off the debt so much so, even if it's lower rate and deductible, that they never get going.
Right.
And 5 or 10 years go by and you lose that opportunity of the volatility of the market. So sometimes if the rates are not egregious, you mix that up. You say, listen, let's do this, and this is our plan. Maybe it's a little longer to pay it off, but we begin savings. Because what happens is when you start saving and investing and you're compounding and you see the growth of that, it becomes positively addicting. It's nice to pay off debt and satisfy that.
We like positive addictions.
We do. There's so many negative ones. So, and what happens is as you start seeing it and it's building, you want to do more. Exactly.
It's feedback. So you're getting that
I
feedback.
like doing something on the savings side.
And I agree with you. I think, Ben, a lot of that debt, the medical school debt, is really, and it was an investment, right, in her. So you never just want to look at that interest rate. So I think you guys are tackling that very well.
And
Ben,
it comes down to the goals too. What are your specific goals, and minding the time frames. If there's one that's 3 years away or 10 years away, you'll invest accordingly.
Yeah, that sounds good. And actually, the only other thing, I to be more specific, the debt is around 2 times her income. But even as a pediatrician, which is on the very low end of the pay scale, as long as it's all federal debt, we found a tremendous amount of flexibility in paying it off. And you can definitely live a comfortable life. If not, you're not joining any yacht clubs, but you'll be comfortable. And
exactly. Well, if you really want to be rich, you just got to want less.
Yeah, exactly.
That's true.
It's all in your head. Ben, thank you so much for joining us today.
Thank you so much, Doug, Carmen.
Doug, thank you so much for joining us today. Doug Flynn is a certified financial planner and founder of Flynn Zito Capital Management here in New York. Thank you, Doug.
Thanks, Carmen.
Have a money question? Head to AskCarmen at marketplacemoney.org or tweet at LiveMoney.